Hello all, welcome to Strategy 6. So thank you for joining us for the previous 5. Hopefully by now you've started to see a trend or two. First trend is you can see that some of these strategies are very similar. And when I say similar, the mechanics aren't necessarily the same. But what we are seeing is we're seeing entries into trades that are very close. So either a little bit sooner or a little bit later, depending on the conservative nature or aggressive nature of every entry. Okay. Up to now, we've also kind of explained how some of these short-term strategies, especially for newcomers to traders, might benefit from using the Telegram channel. Then you can kind of find an execution strategy that may aid you in being able to get into a trade rather or as opposed to learning getting chucked into the deep end, for lack of a better phrase. Okay, so this is no difference, guys. Again, we're going to introduce a different way or a slightly different way of a moving average. We're also going to introduce a new indicator, and in conjunction it will give us a double confirmation system, which allows us to, in many circumstances, be a little bit more conservative and be a little bit more sure on our entry. Again, it will have that same risk management system that we've used over the last couple of days. Okay, so let's start off with the first chart, guys, or the first moving average. This is very similar to what we saw in strategy 5. Okay, a moving average, and what we've got here, again, we're going to use a period 5 moving average. Okay, so nothing new there. We're also going to use a shift of 3. So up to now we've shifted at 5 periods or 5 candles. This time we're going to shift it 3 periods. Guys, the reason being is that it's not going to be as aggressive as our 5 and 5, our period 5 and shift 5, and a linear weighted like the previous strategy. Instead, we're going to be a little bit more conservative on the shift, and the reason being is we are going to use a simple moving average. Okay, so we're not going to weight our most recent candles as more important than the rest. Instead, what we are going to do is just do a simple moving average, so almost every candle has the same amount of influence over our next entry. Okay, so that is the first moving average. Right, then we're going to introduce you to a different kind of indicator. So this indicator here, you can see, let's just pop that on there. This is called an ADX. Okay, so I'm just going to get it up here quickly so you know where to go. You're going to go to Insert, Indicators. You're going to scroll down to Trend, and then you're going to see here, Average Directional Movement Index. Okay, so that is what we commonly call an ADX. Again, guys, don't worry about the mechanics. The template to this strategy, and every strategy for that matter, is included within these strategy series. Alrighty, so what we're going to highlight first is this ADX is not like the previous oscillators or indicators that we've introduced in strategy 5 and strategy 4. Okay, this is not a contrarian indicator. So as you can recall, we introduced you to a stochastic and we introduced you to a MACD, and both of those were contrarian. And when I say contrarian, what I mean is that when price was at the top, we were looking to sell, and when the indicator was at the bottom, we were looking to buy. That's not the case at all. Okay, this is very different in that this does not explain at all the nature of what we're looking to do. What it is the green and the red line is a filter or a trigger. All right, so that just merely says to us that when red crosses over green, so red crosses above green, that means we are looking to sell. Okay, so remember, red, sell or short. When the green, as you can see here, let's just do this quickly. So as you can see, when red crosses over green, we're looking to sell. When green crosses above red, we're looking to buy. So relatively simple. Green means go or buy, red means short or sell. And you can see at these particular times, there we can see the sell round about the same time as the red crossed over green. And here you can see the buy roughly the same time as green crossed over red. Okay. The blue line, guys, just merely illustrates how strong the trend is. Okay, so a blue line that is above 40, that tells us that the trend is relatively strong. Okay, and when it starts to bottom out, like we've seen here, we've just seen a trough a little bit. That might just say that the trend is starting to peter out a little bit. Okay, guys, under 20, when you see the blue line that is below the 20 mark, and for those of you that are looking for those, there's the 40, there's the 20. Okay, so anything under 20 here you can see, that tells me that there's no trend. Okay, and you can see that through here. So at the same token, no trend, and at the same time, no trend. So price is showing a sideways action. Okay, so just to recap, a blue line that is above 40 will tell you we're in a very strong trend. Okay, a blue line below 20 tells you there's no trend, so we're in a sideways trading pattern. So below 20, we don't want to trade. Okay, generally, guys, anything over 20, a blue line over 20 says that there is a trend and it is worthwhile trading. Okay, so how do we piece all of these together? That's what the chart looks like. You have your ADX indicator at the bottom, and you have this moving average on the price chart. The reason, again, guys, a double confirmation system, so it may come across as being just a tad more conservative than what you've experienced in the past. But what this will do is that it will allow you to get a more consistent entry. Okay, so we want all things to happen first. Okay, so first thing which we look for, guys, the only thing that we really concerned with any trade is three things. Keep in mind, on the Telegram channel, we will generally say to you we're looking to sell or we're looking to buy. So when you see that, you would know immediately that if we're looking to sell, we want the red to cross over the green. Okay, so we'd want the red to cross over the green. If we were saying that we were looking to buy, we would say, well, we want the green to cross over the red. Okay, so that's the first step. Now that doesn't mean that we want to trade immediately. What we then want to identify is at that same time, is the blue line above 20? Okay, it doesn't matter if it's at 40, it doesn't matter if it's at 21, as long as it is above 20, that indicates to me that we're in a trend. If at the same time we have the red or the green crossover and the blue is in below 20, then it's not a trade. So here's an example here. You see red and green cross over each other multiple times, and blue is under 20. That tells me that it's not worth trading just yet. Okay. Once we have found that opportunity, guys, we then look for the double filter, and just as always, we'll wait for a trade, a candle to close inside the moving average. Okay, so what I mean by that is, again, like previously, we want for a long trade, we want a candle to close inside the purple moving average, and for a short trade, we want the candle to close inside the moving average. Okay, now let's go through a couple of examples. We'll go to the long example first. The last buy recommendation was on Friday the 11th of September. We were looking for a buy recommendation. Okay, so this was the pound Kiwi. Now, what were we looking for? Okay, we're looking for a buy. So at any given time on the 15-minute chart, because we're looking for a buy, we want the green to cross over the red. Okay, so we had multiple opportunities here. Keep in mind, when we look at something above 20, we're not really concerned if the green and the red is above or below 20. As long as it crosses over, it's fine. Okay, but what I wanted to illustrate to you here is that although green crossed over red here, we can see that the blue line is below 20, and that keeps us out of a potentially bad trade, because as you can see, it wasn't ready. Okay, so let's have a quick squiz here. Here you can see green crosses over red, blue line over here, okay, is above 20, and that tells us immediately, okay, that we are ready to start going for a long trade. What are we waiting for then, guys? We are waiting for a candle to close inside the purple line, and there we have it over here. Okay, so from this entry we can open at the very next candle. So 191.75. My stop loss would be around the last low, so again 191. So that would mean around, let's get here quickly because we opened it over there. Okay, those are some long candles. So we're looking for around, I don't know, 65 points would be the take profit. So that would round about 92.40-ish, 92.45. And there you can see that we were able to get our 75 points relatively easily through the course of the day. All right, so the last DAX we've got here, this was the last sell recommendation we have. Let's just move this over here quickly. That was on the 3rd of September. Okay, so for a sell recommendation, we are looking for a couple of things. We're looking for red to cross over green. And when I say cross over, guys, that would be a buy. Okay, so we want red to cross above green. And we get that over there. Okay. Then we want our blue line to be above 20. Okay, so from that perspective, both boxes are ticked, both conditions are met, and that means we can go to the price chart and see if we've had a candle close below the moving average line. Okay, and in this particular time we had it close on this candle. So where would our entry be? We could get in at the very next candle, which is 134.04. Would have a high above the recent, so that would be our stop loss. So let's just write that in there quickly for you. Again, guys, this is a 1R system as we've used in the past. So our entry equals 134.04. Let's call it 134, the figure, just for ease of mathematics, and then we'll have a stop loss of 134.65. Okay, so the difference there is 65, and that would be our R number. Remember, we are looking for a 1R trade on this. So our take profit would be 65 points, which means our entry for our take profit is 133.35. Okay, so there you have it. If you want to see where that entry is there, you can see it on the right hand side of the screen, guys. There's our entry. Okay, and there's our stop loss. Okay, so we've now calculated our take profit. It's a 1R. We're looking for 65 points. So we want 133.35. Okay, and that gives us the 65 points we were looking for. All right, so there, guys, you can see very, very similar to strategy 5 and 4 in terms of entry, but very, very different mechanics. All right, so some people find it visually easier to see on a stochastic. Some people find it visually easier to see on a MACD, while others find it visually easier to see it on an ADX. Okay, the beauty of an ADX is that we can clearly get an indicator of when we should be selling and buying, because we can see the red crossing over the green. So that gives us the same information as the crossover on the stochastic. It gives us the same information as the histogram closing, or the Manhattan below the moving average on a MACD, but this may be visually easier to see. The blue line with the filter above the 20, I think, is a very nice addition, guys, because it allows us to stay out of potentially sideways moving trades. And last but certainly not least, the risk management is pretty similar to every strategy we've introduced so far, in that we are using key support and resistance levels to find tops and bottoms, and thereby we're able to calculate our take profit. Okay, so again, guys, a very, very consistent and successful strategy. For those of you that are new to trading and you would prefer for us to identify the opportunity, guys, not a problem. Join our Telegram channel. You'll get those recommendations every morning, and then you can use either this strategy or one of the previous 5 to get your entry. Okay, so there you have it, guys. If this is something that floats your boat, please do try it on a demo account, get used to it, perfect it, and I'm sure in no time you'll be trading live on this kind of strategy, and you'll see your account grow in no time. Alrighty, guys, so there you have it. I hope you enjoyed us. The last 2 in this series are going to be some longer time frame strategies, so please join us for that. But thank you for joining us again, guys, and we'll chat to you soon.